It's Andres again. Thank you for watching. So now let's talk about our financial plan. And just briefly, the financial plan, again, it has 4 components. Your annual budget, which we're going to do right now. Then we have the payroll plan or staffing plan, which we already did. Then the third one is the profit plan. And the profit plan is going to be automatically generated once we have the annual budget and the payroll plan. So to create the profit plan, what we need to do is create the annual budget, which is what we're going to do. So we have those 3 taken care of. And then the profit plan is going to give us our revenue targets. And we're going to compare those revenue targets against the 4 element, which is revenue projection. And that's not something that we set up in the system. Rather, that's all the projects that you bring into the office. Once you have the projects, that's going to create your revenue projection. So that's going to give us the 4 components. Okay. So that being said, we're going to focus on the annual budget. Okay. And the annual budget is going to look like this. It's divided in categories. So over here, you see we have a budget for 2024 and a budget for 2025. Okay. So now we're going to create 2026. So let's take a look at 2025 only. And let's take a look at everything here, including income. So there's 4 sources for this data. Project income comes from your projects. So we're not going to put this in the budget. It's going to come in later. Then we have payroll, and that's the annual salary expense. That comes in from your payroll plan that you already created. So that's coming from outside. And then software as well. It comes from your software plan. Everything else that's in here is going to come in from our budget creating exercise, which is what we're going to see here. So again, let's take a look at what we have for 2026. If we go to our staff and we go to our payroll plan, we have a payroll already created for 2026 and it's giving us an annual salary expense of $425,000. And if we go to our software plan for 2026, we'll see here that we have a software plan with a total cost of $23,000 per year. So we have those 2 data points. Now we can create the budget. Projects are going to come in after that. So to create the annual budget, we're going to first create a monthly budget with this budget planner. And we're going to list every expense that we think we need to cover every month to be able to run the office. And these expenses are going to be classified under different accounts. So these are the accounts, and these are coming from our financial settings, which are here in 330. And that's the chart of accounts. These are the accounts. I'm going to talk about this in the next video. For now, let's assume these are correct and these work for you. And we go to the budget planner and we create all these different expenses that we have. And so let's say office space, let's say it's not $3,500. Let's say it's $2,500 per month. That goes here. And you want to have a note here, due on the 1st of the month. And this is a monthly expense, and you'll see here, this little table here, this little column here is going to tell you when this expense needs to be paid. So if this was bi-monthly, you would probably just do January, then you don't do February, then you do March, and you don't do April, you do May, and so on and so forth. But in this case, this is monthly. And you'll see here that if I was to highlight this is only due on January, March, and May, this is going to tell me the frequency is not monthly, is another one. It's going to just flag it for you so that you know. But right now, let's just focus on this. This is a monthly expense. Then you have a payment method. So how do you usually pay your monthly lease for office, right? So we try to get as much as we can on a credit card so that we can get the points and the rewards and all this stuff. And then we pay the credit card every month. And then the pay period. So again, everything in the system, it's either set up to be paid on the 10th or on the 25th. So in the case of rent, if it's due on the 1st of the month, then you want to pay it on the 25th. Okay. If it was something that was due on the 15th, then you would list it for the 10th. So you go through these items. If you need to add another one, you could add it here. So you can add a recurring expense to office expenses account, and you would say C8. And this would be, let's say, sample expense. And then you're going to say, this is $150 per month. And then you're going to be wanting to pay, and you're going to want to pay this by credit card. no notes here. This is just an example, and you want this to be paid on the 25th of the month. But this is not every month. Maybe this is every 6 months. And there you go. So you have a sample expense, 150 per month. This is a new, let's say, year. And then you pay it on January and then on June or July. I guess in this case, that would be more appropriate. An example of this would be insurance, for example. We pay once a year, or professional memberships, or things like that, right? So what do we do with this information? So we're going to go to the Profit Plan Simulator. Now we're going to select the year. So we're going to select here 2026. So now this is going to pull in information from our payroll plan. It's going to tell us what our payroll plan is. It's going to give us the utilization. And it's going to also give us direct labor and indirect labor. It's going to pull information from the budget planner over here, almost $32,000 per month. It's going to turn that into a yearly expense, and it's going to add the yearly software plan expenses to give us a total operating expenses per year. So you have payroll expenses and operating expenses. Over here, it's going to summarize the total. It's $830,000 per year. And it's going to give us a percentage for each one of these. And then it's going to ask you what your profit target is. So you can do anything here. If we do leave a 20% of profit target, it's going to tell us that our revenue target is $1,038,000. And that's what we need to bring in new projects for next year. It's going to tell us what our overhead rate is, what our break-even rate is, and our multiplier. This is going to go back to your payroll plan. It's going to go back to your billing rates and all that good stuff. You want to make sure that this is somewhere 1.5, 1.75. This is typical for an architecture office. So this sounds about right. And if you need to override the scenario to test it or adjust it, you can do it here. You can override your utilization. For example, you want to say, I think my utilization is too high, so I want to be at 60% utilization for the office. Then this is going to give you a different total. So if you want to override payroll, you want to say, I want to see my payroll at 350,000, then that's going to affect your numbers, and your revenue target is going to be lower, but your break-even rate and your billing multiplier are going to be much higher, so expenses are way too high for that. So this allows you to play with it if you need to, but ideally, once you have your payroll and your expenses, your overhead rate is something that is reasonable. So once you have all this, you can go to the budget creator over here, 233. And then you're gonna, by default, this is all checked in. Like you see, the sample expense was not checked in. So you wanna include all of this in your budget, including your project income, your payroll, and your software, which have no amounts, because you still want to create the records. Again, let's go back really quick. We're going to set up our staffing plan and our software plan, right? So those are set up and they're set aside, and we looked at those in the previous videos. And on this one, we're going to go to the budget planner and we're going to set up our monthly budget. Once we're comfortable with this, we can take a look at the profit plan simulator to see what this looks like in terms of overhead. So it's going to compare your payroll to your operating expenses and to your utilization, and it's going to give you your rates for the office. If this is acceptable to you, then you can create the annual budget. And to do that, you're going to go here to Budget Creator. You're going to make sure that every expense year that you want to create is included, and then you're simply going to create. This is going to take somewhere between 5 to 10 minutes, to be honest. It's a lot of records in the background. So I'm going to create this. I'm going to go get some coffee. I'm going to come back in a few minutes to take a look at this. So we're going to create. This is going to start to create some tasks in here. As these start to get created, you're going to see them here. It's going to be creating records, linking them together, moving them from one end to the other, and it's just going to go one by one. So we go back here to our budget planner and our budget creator. We're going to see here, this is creating now, 551. And it's going to tell you here how many of these are creating, how many are remaining. So you can keep track of this. So let's just let this run for a little bit and then come back. So now this is complete. We have 0 remaining. All of these have been created. One thing I missed before is before you create the budget, you choose which year you're going to create for. So if I wanted to do for 2027 now, I could do it here 2027 and then hit create. I'm not going to do that because it's just going to start running again. But now we can go and take a look at our annual budget. So if we go to financial plan, we can see annual budget. We can see here 2026 is done. So you have 425,000 that's coming from payroll. And then you have from software, that's 23,000 that's coming from the software plan. And then every other expense here is coming from the budget plan. And this is divided on the categories, right? It's showing you on a month-to-month basis, but it's also showing a total for the year. So we can take a look at it by account or by transaction as well, if we want to. So by account, let's take a look at 2026. And we can see all the different accounts here. So let's take a look at office expenses, for example. You have office space here. You can see here January through December. Then you have telephone and internet here January through December, and so on. The sample expense, let's take a look at it that we created. That's probably here. And you'll see there's only one in January and one in July because we only said that happens only on months 1 and 7. So it's created here on months 1 and 7. And we'll see this in the transactions table in a second, which becomes a lot more useful. Now, if we look at this by transactions, not by account, but by transactions, we can also, let's take a look at 2026. Take a look at office accounts, office expenses. So office space, right? You have all the days when you're supposed to be paying your office space. So on the 25th of every month, that's going to be that amount, right? And then if we look at that last sample expense, is going to show you on the 25th of January, on the 25th of July, you have to pay for this sample expense. The amount that you're budgeting for is $150, and then you're saying I'm going to be paying it by credit card. Then when you move on to the profit plan, as I said, this is marrying together information from your payroll plan and from your expenses, and it's showing here. So you have a profit plan here, you have an overhead rate, break-even rate, billing multiplier, you have a revenue target. It is assuming a 20% profit target. That's the default, but I can change this and I can say I want to do 15%. I can go back here. It's going to adjust the numbers, it's going to adjust my revenue target, it's going to adjust my overhead, break-even, and billing multiplier. With the profit plan in place, if we go now to the payroll plan, we're going to see that our break-even cost, break-even rate, overhead rate, billable rate, all these are now set. So you have a complete payroll plan now. And then your revenue projection, again, we have it here, right? We have the target realizable revenue, 974,000 is here. We can also see this in the profit plan, 974,000 here. And then from here, we can go to our actual revenue projection, which is pulling all the information from the projects that are in the books and the projects that are in proposals. So this is going to bring you the information for 2026. And of course, 2026, if we're just doing the budget, there's only a few projects that are going to be bringing in money in 2026. For example, if I sign a project today or last month, it might carry over with some invoices over 2026. So in here right now, we have an amount under contract of 31,000 for 2026, and we have proposals for 29,000. So if our target is 974,000, then we really need to double our efforts to bring in more work to be able to meet those targets. So for the budget, you have your payroll plan, you have your software plan, and then you have your monthly budget, and then you create the annual budget, and everything comes together.